Good morning, ladies and gentlemen. Welcome to the show. Listen, I'm glad to have you guys here. Today is the 14th of February, 2020, and it's a Friday. Uh, Thanks for tuning in. Let's get started. Let's open up the charts right here and take a look at what's going on. First thing I want to point out to you guys is this article here on Zero Hedge. Now listen, guys. Chinese auto sales. If you were a person over there in China right now, really, and you're not allowed to leave your driveway, you're not allowed to go anywhere, right? Why on earth are you going to buy a new car? If life is so uncertain that you don't know what's going to happen next, and you're locked inside your house, you can't even get to the car dealership to buy a new car, besides want to buy a new car. So it says here in this article, Chinese auto sales plunge in January, and February could be much, much worse. February could be zero auto sales. Who's going to buy a car right now? If you're in China and you're locked up, why are you going to buy a car? That doesn't just make any sense at all. You know? I mean, we could see not a plunge in auto sales, we could see no auto sales. Honest to goodness, let's take a look at the silver price today. See what's going on. 1777 for silver. It's up 15 cents on the day. Now, I'll tell you what, guys. I don't think we've seen the price moves up that were... They knew this was coming a long time ago. They put stops on the price moves of gold and silver. A long time ago, they put these stops in. Maybe 2 or 3 years ago. I can't remember exactly when. It might have been about 2 years ago. They put these stops in. So if silver, I think, moves more than $3, they can stop it for like 15 minutes. This is so they can slow it down so that they can get their buddies in there to buy it all. That's what they're up to. They got these stops of gold. I think it's like $22 or something. If gold moves more than $22, suddenly they stop it for like 15 minutes. I think they can stop it like 3 times, and then they have to let it go for the rest of the day, And they didn't put those stops in because they're scared silver's going to fall $3. They put those stops in so that they can stop it from moving up if it moves up more than $3. That's why they put those stops in there. So we're looking at a price of $17.77 on silver today. Let's check gold. Gold is shooting up even better. It's up $5.80, $15.81 today for gold. I'll tell you, this is just a start. Gold and silver price right now, I'm looking at right now, the way I'm looking at them, it's like they're at bottom right now, and the bull run is just beginning. There's guys out there who think that silver and gold have had their bull run already, and they're getting ready to fall. They're not thinking properly. They don't realize the bull run hasn't started yet, not really. We've had a little bit of bullish sentiment, but we haven't really had the bull run yet. So 1581. Anything under $2,000 for gold is cheap. I'm telling you honestly, considering what's coming, in the not too distant future. Let's take a look at cryptocurrencies today. And what we're seeing with cryptocurrencies is cryptocurrencies has been catching a good bid lately. And as long as we're seeing that Bitcoin dominance low or dropping, then the good times are probably going to continue. We got to watch that Bitcoin dominance because that's your signal for cryptocurrencies. If they're buying in heavily into the alt currencies, then what that means is it's a bullish market. And if they're dropping the alt currencies and buying into Bitcoin, that's a bearish signal, So Bitcoin dominance has been falling and it's continuing to fall. It's at 61.5%. Market cap on cryptocurrencies, $303 billion for the industry. And we're looking at a Bitcoin price at $10,238. And all the altcoins are catching a bid quite nicely. We're seeing the prices moving up on a lot of these coins that you guys love and you guys are holding. Anyway, let's move on and let's take a look now at the Dow Jones Industrial Average. And what we're seeing for today is we're seeing a dropping Dow, but it's not dropping substantially. It's only small moves down. You know? There's still no real big amount of fear in the Dow Jones right yet. I'll tell you, when the real fear comes, what we're going to see is we're going to see 1,200-point drops in one day. And then before the market opens the next day, if we look in the pre-market, after 1,200-point drop that previous day, we look in the pre-market, and we'll see it's down 600 points before it even opens. That's how we know when the fears arrived. Okay, that'll be your signal for when the fears finally arrive. When reality is finally set in on the market. So right now we got two forces tugging and pulling at this market. We've got the force out there that is the Fed and the central bank money printing and the stimulus measures that are going in. That's pulling the market up. And then we got a force pulling the market down, which is reality of what's going on in the world. It's pulling it down. Well, the reality is so bad right now, what's really going on in the world, that it even is pulling the market down against the forces that are trying to push it up. And so that's why we're seeing a 26-point decline in the market. Any good news at all right now? You know, they're gonna, anything they can even interpret as good news. And this market will shoot upwards. Okay, but we're down 29.85, 29,393. The market's poised, you know, to go up above 30,000. It would have been up above 30,000 right now if we didn't have this big black swan in China. Honest to gosh, it would have been way over 30,000. It would have been like 30,500 right now if we hadn't had this, what's going on in the world. Let's take a look now at crude oil. $52.13. Crude oil's been catching a bid from its bottoms. You know, its bottom was 49.46, and then we put in a second bottom at 49.76. And ever since then, it's been slowly easing its way up, and it's now up into the 50s again, 52.13. The bottom could drop out of crude oil. Look, all the Chinese, they're not driving anywhere right now. The streets are empty. And so that's not going to be, that's a lot of crude oil. It's not going to be being used. Now, what if that starts to spread other places in the world? And it's just not going to be being used. Well, there's inventory builds, you know. And if nobody's using crude oil, there's not near as much driving going on or anything like that. You're going to see prices plummet on crude oil later if that's what happens. Let's move into U.S. Treasuries, and let me tighten this chart up so you guys can see. Because I'm going to tell you what, guys. They changed the font size on this, and they made it so tiny. It must have been somebody who has excellent eyesight who changed the font size, and they must have said, well, that's good enough. That's good enough for them. Actually, it's a free chart anyway. They're getting it for free. What more do they want? Anyway, look. The U.S. 30-year right now is suffering the biggest drop in yields. 4.9 basis point drop today alone, and it's at 2.02, the U.S. 30-year. The U.S. 10-year's next. It's almost 4 basis points drop at 1.57 for the U.S. 10-year. So we're seeing yields falling. The further out you go on the yield curve, the further they're falling today on yields. Let's take a look at the U.S. dollar index. I said, let's take a look at the U.S. dollar index. Why is this computer so darn slow? I'll refresh the page. We're waiting. There it goes. Anyway, here it is. U.S. dollar index, 99.03. It had a drop down to 99 right on the board, and right now it's just trying to keep its head above 99. It's almost ready to go down to 98, you know. On the U.S. dollar index today. Listen, thank you guys for listening to this show. Like and subscribe. Give me a thumbs up. Those thumbs up are very important to my channel. And we'll catch you guys on the very next show. And you guys have a great day. Bye-bye.